Well, we're launching the ANZ CoreLogic Housing Affordability Report. This one has a special focus on COVID-19 and the impact that the pandemic's had on the rental market. And I've got with me today Eliza Owen from CoreLogic, who is the lead author of the report and understands all the detail around it. You know, it's been a really interesting report this time round, hasn't it? With, you know, such a different impact on different markets around the country.
Yeah, I think it is so interesting to see such a diverse effect on rental markets. And that's come from the very specific way that COVID-19 has impacted the economy. First of all, we've seen a lot of job loss in sectors like food and accommodation services and arts and recreation services. So payroll data is showing that jobs are down about 20% across those sectors. And those are sectors where people are more likely to be young and they're more likely to be renting. So the decline of social consumption because of COVID-19 has had a very specific demand shock in the rental space from that employment perspective. The other big part of it is overseas migration. That's virtually stopped. And that's important because we know that about 80% of people, when they first come to Australia from overseas, they're renting when they first come here. So that's another massive shock to demand in the rental market. But the rental markets have been differently affected depending on how much they're exposed to international migration, how much of their workforce is comprised of people in hospitality, tourism and the arts. And that's where we see that areas like Melbourne, Sydney, inner city areas, parts of Hobart, those are the places where the rental markets have seen that really big demand shock. And then on the other side, as you say, there's increased supply that comes from the conversion of Airbnb to the long-term rental market. As well as the fact that in the lead up to COVID-19, we had a period of a lot of investor participation in the housing market, and that had created a lot of investor grade stock and a lot of rental supply coming into this downturn as well.
And so what we found in the report, isn't it, is that some of these inner city areas have a much higher proportion of people who work in hospitality, as well as a much higher proportion of those migrants coming in. So there's been really large increases in listings and downward pressure on rents, particularly in those inner areas, haven't there?
Yeah, absolutely. So in the inner Melbourne region, we've seen an increase in total rent listings from the start of the pandemic to the end of June. Total rent listings were up about 60% in those areas. In inner city and inner city Sydney, we've seen that total rent listings is up over 50%. So these really large increases in volumes, and that's where you see the biggest decrease in rent values as well at the suburb level. We can see across South Bank in Melbourne, in the Haymarket suburb of Sydney, that's where we see that rental values are down about 7% over the June quarter. And that's where we're more likely to see tenants, I think, successfully negotiate rental reductions because there's been such a large influx of stock.
And the impact of the short-term rental transition to long-term, that's a tricky one, isn't it? Because while international borders are closed, we're gradually seeing the opening up of state borders. And if tourists have to stay at home, they can't go overseas, then domestic tourism should flourish. So what will happen then?
Yeah, I think there's been this kind of dominant narrative around the increased supply in rental stock because of the conversion from Airbnb to the long-term rental market. But I think what tenants really have to be aware of is that once interstate borders open up and domestic tourism kind of sees a bit of a resurgence as things start to ease, that stock might get reconverted to the short-term accommodation market again. So I think that's where we start to see areas like Hobart, for example, where total rent listings have actually started to tighten up a little bit. And that could be owners of Airbnbs anticipating that borders are going to reopen and sort of preparing their property for that market again.
Look, we've talked a bit about Sydney and Melbourne and Hobart, but actually it's been quite a different story in the other capital cities, hasn't it? You know, what's happening there?
So across other capital cities, we've either seen that declines in rental values haven't been as severe, or we've actually seen a little bit of an increase, say, in rental values across parts of Perth, for example. And I think the main reason we see that is because in regional areas or other capital cities like Perth and Darwin, for example, we've just seen the continual withdrawal of investors, and that's led to a more tightened level of rental stock. In regional areas as well, I think you don't get the same level of investor participation and development. And so that's led to relatively tight rental markets as well. And it does just go to show that the pain that we see for investors and the opportunity that we see for tenants, it's a very localized situation. And I think that also speaks to the fact that you can't rely on a pandemic to create more affordable rental accommodation for everyone. It's going to be some people that have an advantage because of the nature of the rental markets, but other people might still be seeing rents going up in their area. There might be investors who see an opportunity to invest in cities like Sydney and Melbourne for the long-term capital growth. But if you're an investor looking at more of a rental yield strategy, the next, I think, potentially 2 years are going to present a real challenge. I mean, at least until we see the reopening of borders internationally.
So really, it's been a really interesting story. You know, different impacts on the different geographies, impacted by the particular way the pandemics had an impact on industries like hospitality, and also, you know, different opportunities for renters and for tenants. And the whole affordability question, I think, is a little bit blurred now, because we've got these improvements in some way in affordability, but if you don't have a job or an income, that is really going to make a difference. So lots of nuances in the report this time round.
Yeah, absolutely.